market analyst here at HF Markets, and I'd like to welcome everybody to another live session. We're going to have today, just in the next 15 minutes, one of the most important events of this month. And it's very important because we're likely to see a very large drop in inflation. We're likely to see inflation drop from 2.9% to 2.6%. According to experts and economists. And it's very important because it's the first time we're going to have a rate decision for 2 months now. That we're going to have an inflation data released a week before the rate decision. It's been 2 months since we've had a rate decision. So it's a very important announcement today. We're going to be looking at the core CPI release in America, as well as the official CPI release. For those of you that don't know what the CPI is referring to, we're referring, of course, to inflation. So we're expecting a lot of volatility for the US dollar, for certain commodities, and also, of course, for the US stock market, including the NASDAQ, one of the best performing indices in the world. It has been the best performing over the past 12 months, the best performing over the past 5 years. And if we go even further back, if we go back 15 years, there's only been 3 years in the past 15 years where the NASDAQ has ended lower. Today, we're going to see some of these very popular assets witness a lot of volatility. What we need to determine, though, is what type of volatility we're going to see, where potentially we can take into consideration certain signals, certain entries, as well as take profits and stop losses. We're going to look to plan the US session to see, depending on what certain scenarios we're going to experience within the market, to see how that's going to affect certain assets, where potentially the signals are indicating certain entries and exits, take profits, stop losses, and of course pivot points as well. So we're going to share our MT5. And by the way, ladies and gentlemen, this session is a live session, so it's a very unique session. Now, because we've still got 13 minutes before we start to see, before we get the announcement actually released, what I want to do is show people how they can build a bias before the news is about to be released. So even before the news is going to be released, to be able to sit and see from certain aspects of the market what kind of conditions we are experiencing today. So I'm going to share a new screen. Now I'm sharing my Google screen because I just very simply want people to know, and in very basic steps, to see exactly how we're able to determine certain conditions within the market. So if we go to Google and if we type in on Google FinViz, like so, if we go to FinViz, we go to the first website which appears, which is the stock screen of FinViz. And then if we go to futures, of course, keep in mind that futures is basically derivatives. So CFDs is a type of derivative, as is futures. But if we go to futures and we go to the performance section, so you can see it gives you options for quotes, performance, and also charts. What it's actually doing is showing you the performance of the most traded assets around the world. Now, you can use this in different ways. For example, you can also use this when analyzing currency pairs. So when we're trading currencies, a lot of traders, they look at a currency pair as a single asset. They're looking at, for example, the Euro USD, they're looking at that specific asset, and they're trying to look at technical analysis to determine how the price is going to move within the next hour, within the next 30 minutes, and so on and so forth. But there's benefits to also looking at the assets, the currency pair, as 3 different assets. For example, you're going to look at the Euro USD as a single asset, to look at the Euro as a single asset, and also to look at the US dollar as a single asset as well. So for example, if you're looking at the US dollar at the moment today, it's declining 0.17%. So we can see the US dollar is declining. What I will mention is that the decline was significantly higher, ladies and gentlemen. I can see some questions here. Of course, I will answer all questions throughout today's webinar, throughout today's live event. So if we're looking at the US dollar, there's two things to take into consideration. Yes, number one, today it is lower. It has declined. It's mainly seen bearish price movement, but the decline at the moment is 0.17. If we're looking at the US dollar index earlier on in the day, it was significantly higher in terms of the decline. So we have to take that into consideration. So we're looking at a scenario where the US dollar is weaker, but it's attempting a correction. Now, what we want to see ideally is to have two currencies which are not conflicting. So, for example, if we're looking at the US dollar, sorry, if we're looking at the Japanese yen here, you can see the Japanese yen is the best performing currency of the day. Now, of course, that may change as soon as we get the CPI release. But so far, based on what we're seeing at the moment, the Japanese yen is the best performing. Now, there's benefits, of course, to looking at the Japanese yen, which is increasing in value, and speculating further upward price movements, because, of course, that is the Japanese yen index, and we can very clearly see the Japanese yen's increasing today. Now, people would see disadvantages, for example, if you're looking at the Japanese yen, which is increasing in value, and also looking at the Canadian dollar, which is also increasing in value. So you've got the Japanese yen and the Canadian dollar both increasing in value. So if you're looking at the CAD JPY, there's going to be conflicts there. There's going to be a lot of large retracements. There's going to be corrections. There's not going to be a very clear trend, and that makes it more difficult for you to trade. Whereas, for example, if you're looking at the Japanese yen against the New Zealand dollar, the New Zealand dollar is one of the weakest performing currencies of the day. Japanese yen is one of the best performing currencies of the day. So when the CPI announcement is announced, we will re-look at this screen to see what type of price movements we're seeing in terms of currencies individually. Because, for example, if the US dollar is going to weaken further, then of course there's benefits to looking at the Japanese yen, the USD Japanese yen, because the Japanese yen is significantly increasing in value. There's also benefits to looking at the US dollar against the euro, also against the Canadian dollar, because these are the currencies today which are performing well. If you want to speculate that the US dollar is going to decline, you of course don't want to speculate it against another currency which is also declining anyway. So yes, it still may decline, but it will be a smaller decline. There will be more volatility. There will be more retracements. There will be more uncertainty. And of course, especially if we've got beginner traders watching today's webinar, they want clear price movements. They want their assets, a currency pair, which is easier to analyze, easier to determine the trend, where to enter and where to exit. In order to get that, of course, ideally, we need a strengthening currency and a weakening currency. So that's something we're going to look at throughout the day. Another thing, of course, we're going to look at, ladies and gentlemen, because it's one of the categories which is very popular on our platform, is the stock market. So if we're looking at the global stock market at the moment, European stocks are performing very well. We can see here that the Euro Stoxx 50 is increasing in value. The DAX here is also increasing in value. A lot of commodities are also increasing in value as well. So we can see there's a slightly higher risk appetite within the market, which generally speaking is positive for the stock market. The only thing which is negative is, of course, Asian and US stocks are declining. Now, Asian stocks isn't such a big deal. It's not necessarily a massive risk. US stocks, which are currently declining though, of course, that's something which is understandable because we're about to get the CPI release. So a lot of investors are probably going to say, I'm going to hold back buying any or opening any other trades. I want to see the announcement, and based on that, the announcement, I would determine whether it's something which is positive, in which case I may consider a buy, or something which is negative. So that is something, of course, we're going to look at today as well. Something which is very important is here at the bottom, we can see the VIX. The VIX at the moment is declining 0.20%. Now, that's not a lot of volatility for the VIX. Okay, again, it's understandable. But keep in mind, the weaker the VIX becomes, the lower the VIX will decline, the stronger the indication that the stock market will also will increase in value. If the VIX increases in value, it's an indication that the stock market will decrease in value. And I'll give you an example, ladies and gentlemen. If we look at the past month, for example, let's not go back so far. Looking at the week, for example, here we can see the week. If we look at the VIX, ladies and gentlemen, where is the VIX? You can see all the way here at the bottom. So it's minus 6.73%. So potentially, of course, that's something which is positive for the stock market. But we also want to see today that the VIX is going to continue to decline. 0.20% is not enough to indicate upward price movement for the stock market. Of course, though, we're going to wait for the announcement to see what kind of volatility and what changes within the market. Now, because I'm mentioning the stock market, what I also will mention, ladies and gentlemen, is two more things. We need to look at the components, something very, very important as well. If we're looking at the NASDAQ, ladies and gentlemen, we're looking at the components here. You can see they are ranked, and based on their rank, it will show you how much weight there is to each individual component. So each individual component, ladies and gentlemen, you can see, for example, Apple makes up 9% of the NASDAQ, the most influential stock. If you look at Microsoft, again, more than 8%, the second most influential stock. So I'm looking at the most influential stocks within the NASDAQ, and I'm going to see what percentage are increasing in value, what percentage are decreasing in value. So for example, I may look at all stocks which hold 1% and above, so a weight of 1%. So here, for example, we can see 1% and above is 24 stocks. I will look at these top 24 stocks after the announcement is made, and I'll say what percentage are increasing in value and what percentage are decreasing in value. If 70% is increasing, it's deemed as an indication that buyers are controlling the market. If 70% are decreasing of the most influential stocks, again, you can use that as an indication that the market is actually declining instead. So, of course, that is definitely something we're going to look at once the announcement is made. We're also going to look at bond yields, ladies and gentlemen. Bond yields, very simple. Higher bond yields is negative for the stock market. Lower bond yields is positive. At the moment, they're 20 basis points lower. It's not massively lower, but nonetheless, it is lower. So you can consider that as something which is positive for the stock market. That's something we're also going to look at. And the last thing I will also mention is the CME Group, which is basically the Chicago Exchange, one of the largest exchanges in America. They have what is known as a Fed Watch tool. Now, I can see one person here is saying, how can I get access to the Fed Watch tool? So if you go to Google, I'll show you very, very quickly. If you go to Google, Fed Watch tool, and you click on the first website which appears, it will take you straight to that page. So you can see that page here. So if you scroll down, let's just wait for the page to apologize, my internet slightly slow. So if we wait for this page to load, here we go. So it's giving you what the market believes. Is there a possibility of a 25 basis point rate cut, and a 50 basis point rate cut? Now, what you've noticed over the past month is that the stock market has declined to a certain extent. This is because previously it was almost 50-50 that we were going to get a 50 basis point cut or a 25. Now it's almost certain, 71% believe it's only going to be a 25 basis point cut. The only time that may change is if today's inflation data is significantly lower. Now, if the inflation data today is lower, then of course we can take that into consideration that there's going to be a higher rate cut, 50 basis point basically, and that's positive for the stock market. So let's go to today. Here we've got our calendar, one of the best calendars, ladies and gentlemen, within the financial trading market. So we're going to put the United States of America We're going to put today, we're going to filter, and we can see the inflation rate here. So we can see CPI, the US inflation rate, has declined not to 2.6%, but it has declined to 2.5%, ladies and gentlemen. Also, we can take into consideration here the index, which is lower than expectations as well. You can see here it was expected to come in at 314,980, came in significantly lower. The only thing which is partially negative, should we say, is that the core CPI monthly data came in higher than expected. So that's something which is negative. But nonetheless, the official inflation rate for America came in significantly lower. So it's dropped from 2.9% to 2.5%. So that's 0.4% lower. So let's go to the MT5. Let's actually start off with the stock market. We're looking at the stock market here. We're looking at the NASDAQ. What you can see is, even though we've got some positive data, like I said, the data is partially 50-50 because core inflation was higher than expected. The official inflation was lower than expected. So how can we trade this? This is what we're going to look at today. So here we're looking at the NASDAQ. The NASDAQ, we can see three things on this time frame. This is a 2-hour time frame. We can see we're trading below the trend line. This here, ladies and gentlemen, is a 75-period exponential moving average. You can see it found resistance here. It found resistance here again. We've gone back up to that trend line. Again, we found resistance. So we're trading below the trend line. Also, we must take into consideration, for example, here you've got lows. Here you've got lows again. And here you've got, apologize, that's the wrong line. Let's put the correct one. Here we go. So we can see we've got 3 lower highs. So that's something for us to take into consideration. If we're looking at the lows as well, we can see we've got a lower low here. We have a lower low here as well. And again, we're still getting lower lows. So we're trading below the trend line. We're trading below the price sentiment line as well. So it's basically giving us an indication of whether there's bearish sentiment towards the price or negative sentiment towards the price. We're trading below. So we're trading below all indicators. The only thing which is higher is the RSI, which is actually at the neutral area of the market. So here we can see we're at the neutral area of the market because it's just below 52, which is neutral. For it to be in the buy signal, we need to be at least above 55 on the RSI. Keep in mind also, the RSI is not on the default settings. The RSI is on a period of 18. So we need to take that into consideration. So if we switch to a 5-minute time frame, for example, and we actually go to the NASDAQ, you can see that the price is declining. It is slightly retraced. Also keep in mind, ladies and gentlemen, here we opened on quite a strong price gap as well. Look at this price gap. So there's a price gap here of 0.18%. So we can see some negativity there. We can see largely downward price movements as well. Now we have retraced. So of course we need to take that into consideration that we are retracing. The retracement so far was up to here. Now it's more or less there. So that's where the retracement is. Also, people may want to keep the retracement at the average price, which is here. So we've drawn a Fibonacci area on the retracement. We're trading now almost below the average price. We're definitely trading significantly below the neutral area of the RSI. The RSI, if we're on the 14 period, we're currently trading at 35. So we can see we've got downward momentum. Now, what I will say is, because if we look at our 2-hour time frame, we can see we are attempting a correction. There is upward momentum as well. The news isn't necessarily significantly negative. And of course, we have to take into consideration there is going to be an interest rate cut within the upcoming week. So we have to take that into consideration. So if we're going to speculate a decline, yes, it is still following technical analysis, but slightly against the volatility that we have seen so far this week. So if we are going to speculate a decline, we have to also take into consideration an alternative. Now, if we're going to drop below 65, so below 65 is below here. So not to reach 65, but to break this barrier. This is something we can take into consideration as a signal. Why is it a signal? Because it's in favor of the volatility. We're below the neutral area of the RSI. We're below also our average price. It also, if we drop to that level, it means we're now on a lower low as well. But what I again will say is take into consideration that it needs to be ultra short term, because there is fundamental factors which could push the price higher. But nonetheless, that volatility would be considered a indication of upward price movements. Now, you can look at an ultra short term signal, an ultra short term signal to put your take profit, for example, like here, in which case you're taking into consideration 0.90% profit in a single trade, which is of course absolutely amazing. And there's a lot of volatility, so it doesn't take very long to hit that. And also, you're doing so without dropping below the support level here. So you're able to do so while staying above the support level. What you can do is, if you're cautious about that support level, is slightly increase, put the take profit slightly closer, so slightly higher, in which case you're even more away from the risk of being rejected by that support level. In which case, even if you're going to increase it to that level there, ladies and gentlemen, you're still looking at a 0.14, 0.15% profit. So that is based on if we're going to see a decline down to that level there. Alternatively, we can look at where are we going to get an indication of upward price movement. I did mention that inflation, the official inflation rate has declined. It declined to 2.5. It's the lowest we have seen it. We haven't seen it that low for many, many, many years. So of course we have to take into consideration there can be positive price movement as well. And it can be a signal. We're very, very close to a signal. So if we're going to increase above 65, so we're going to break this barrier, we can get a signal that the price will increase. The only thing I'll be cautious about here is we have to get a breakout and for the RSI to cross above the 50, so above the neutral level. So we're not getting an indication from the RSI that actually in the short term sellers are controlling the market. So that is also something we need to take into consideration. So we've got two breakout levels here. In regards to our profit, take profit, ladies and gentlemen, from this breakout, we also have our Fibonacci levels, which is all the way up to the 100 level here, which is the most recent high. So that is something you can put somewhere, you can put potentially your take profit. Again, though, if people are slightly cautious of the resistant level, because you can see we found resistance 1, 2, 3 occasions at that level. If you're cautious of that level, you can slightly decrease your take profit to a lower price. And again, you reduce that risk. So we just had the breakout there of the 65. We're just waiting for the RSI to break the neutral level. Now, in regards to, because I can see somebody here is asking, what would indicate a longer term trend for the NASDAQ? In regards to a longer term trend in regards to the NASDAQ, ideally we want to see all of these indications on the 2-hour indicate upward price movement, because at the moment we're at a neutral level to a certain extent. So if we look at the neutral level here, ladies and gentlemen, if we look at the neutral level here, if we look at our RSI, the RSI here is at 53, almost at 54. So that's almost indicating buyers are controlling. But if we're looking at the trend line and the price sentiment line, we're below. So if we're going to a scenario where we're above the trend line, we're above the price sentiment line, and of course we remain above on the RSI, then we can get indications of longer term price movement. Now, before moving over to currencies, let's quickly go back to what we were looking at here. Let's, for example, look at the NASDAQ. Let's quickly refresh. Let's look at the NASDAQ. So here we look at the NASDAQ. We want potentially indications of a buy. So from the top 24 stocks, how many are increasing in value? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So from 24, 12 are increasing in value. So that's 50%. That's not even close enough to get an indication from component analysis to indicate that the NASDAQ will increase in value. What I will say though is the US session is yet to be open. Once the US session opens, it's at that point we'll recheck this. And of course, we'll keep rechecking it as we're trading. We'll recheck it. If we're going to get to 65 at least, even better to get to 70, then of course, that is an indication that we can use alongside our technical analysis, like we just were doing. Another theory, by the way, ladies and gentlemen, is people look at the top 10 rather than the top. Basically, instead of look at all stocks which hold 1% above, they look at the top 10 companies. Now, the top 10 companies are actually the top 11 stocks because Alphabet has 2 stocks. Now, if we look at that, we've got 1, 2, 3, 4, 5, 6, 7 out of 11 stocks. 7 out of 11 stocks increasing in value. Now, if we're looking at 7 out of 11 stocks, that is very close to an indication to basically being 70% and above. So that's basically 64%. So that's very, very close. If we get one stock turn into green, for example, Apple here is very close to increasing in value. We're currently at the neutral level. Then again, that can significantly change that scenario. Again, some people look at the top 10 companies. Some people look at all stocks which hold 1% weight and above, in which case it's the top 24 stocks. If we're looking at bond yields, look at bond yields, ladies and gentlemen. Bond yields have significantly risen. So 50 basis point rate cut is definitely, by the looks of it, off the table. That's something we need to take into consideration. The Fed Watch tool, ladies and gentlemen, most probably won't have much volatility because the US session isn't yet open. But even so, even though the US session is yet open, look at the change here. Again, almost certain, we've got 87% now believe that there's going to be a 25 basis point cut. Only 13% believe there's going to be a 50 basis point rate cut. So 50 basis point rate cut is almost certainly not going to take place, at least not in this month. Of course, we've got the next rate decision, which is on the 7th of November. Of course, that's something we can take into consideration as well. Let's look at global indices. Let's look at the VIX more than anything else, because I can see by the looks of it, the VIX is also up. Look at the VIX, plus 35%. Previously, it was minus 0.20%. So we've got higher bond yields, we've got a higher VIX as well. More individuals believe that there's going to be a 25 basis point rate cut and not a 50 basis point rate cut. So there is a lot of factors there which can indicate a decline. If we go back to the 5-minute chart, again, look, we were up here before. If you remember, we drew a Fibonacci like so. We rose to that Fibonacci and we've just dropped below again. This is why, ladies and gentlemen, you know, I said this breakout could be a signal, but I very clearly said it would only be a signal if we break above the 50 on the RSI. We didn't break above the 50 on the RSI. We also have to take into consideration the VIX, component analysis, bond yields, interest rates, and so on and so forth. So it's not just technical analysis. It's like you've got a checklist. So, for example, if we go to a scenario where we've got a checklist of, 5 points. For example, we want an indication from technical analysis, but I also want lower bond yields. I also want the VIX to be appropriate as well, and of course components to at least be 70% and above. Bare minimum 65%, but ideally 70. So that way, the market is 100% in line with how we're trying to trade. We're trading with no indication that the price will move in the opposite direction. Of course, there is volatility within the market, but of course we want to ensure our analysis is of the highest quality possible. So let's look at the Dow Jones before we start looking at currencies. Guys, the Dow Jones is very low. The Dow Jones has actually got 3 lower lows, so very big difference between the NASDAQ and the Dow Jones. Very, very big difference. The only thing I would say is we've kind of got a reverse head and shoulder pattern, but if we're going to decline lower than this area here, then that head and shoulder pattern has gone pear-shaped. It's not something which is relevant. So here we've got stronger indications of downward price movements. We can also look at component analysis for the Dow Jones. If you go, for example, Dow Jones components like so, go to the same website, the Slick charts. Look at this. This is a very clear signal. So for example, if we're going to look at, well, we can take the whole index with Dow Jones because there's only 30 stocks. If we're going to look at the whole index, let's get my calculator out again. So how many stocks are increasing in value? We've got 1, 2, 3, 4, 5. That's at 0. So 5. 5 over 30, ladies and gentlemen. So only 16% is increasing in value. So 84% is decreasing in value. So we've got 84% of Dow Jones decreasing in value. Like I said, bond yields are higher. The VIX is higher, ladies and gentlemen. Let's check the VIX again. VIX is more gone to a neutral level. We're going to keep an eye on that. It's still significantly shot up. So again, if we go to the Dow Jones, there can be a scenario where potentially we're going to get an indication for a decline. So for example, we've just retraced. If we look at this retracement, again, we draw a Fibonacci between the low and the high. We can see the highest level was here. This was the lowest level. So if we cross below this level here, you can deem that as an indication to find this for a signal to indicate the decline. So if we drop below the 65, it's an indication of a decline. Now, I've got a question here. I'll quickly read it. I've got somebody, it's a lady actually, who says, is there other options to find entry levels other than the Fibonacci? Yes. If you look at a 5 minutes, what you can also do, a very well-known crossover strategy, is to have a simple moving average of 18. Let's make it actually blue, for example. So we've got simple moving average of 18 on the 5 minute time frame, exponential moving average of 8. We'll have this as yellow, like so. Now, each time there's a crossover and we're below the moving average. So here we can see the price is below the moving average. We're below, okay? So this here, ladies and gentlemen, is a 249 bar moving average. Okay, another very well-known moving average is 175, which is also very well-known. Another very well-known is 250. Another very well-known as well is 75. 75, though, is less appropriate for crossovers. Very well-known is the 250, 249. And basically, if we're below that, we look at crossovers. So for example, here we had a crossover. So it crossover downwards, and the crossover is below the trend line, which is the 249. So that's an indication. This is an upward crossover. The yellow cross is above the blue upwards. But we're not going to take that into consideration. Why? Because we're below the trend. The next crossover is here. It crosses below. We do take that into consideration. Why? Because we are below the trend. Next crossover is actually here. That wasn't a very accurate crossover. We saw some volatility against us. It didn't go on to a higher high. A lot of people, most of the time, they'll look at the high here. So this is where we've got the crossover. They'll look at the high here and they'll probably put their stop loss somewhere at the high, just above the high. It didn't hit the stop loss, and then the price moved in our favor. So that would have still been an accurate trade. Next downward crossover is this downward crossover here. Again, we're still below the trend. So we've got three indications. All of them would have hit our take profits, depending, of course, what take profits we added. But if we look at that first trade, it declined all the way down here. That's a decline of 0.69. Massive, ladies and gentlemen, absolutely massive. So this is something else somebody can take into consideration. So far, the latest crossover is downwards, but it's retracing. So of course, we're not going to trade. It's not a signal just yet because it's retracing upwards. But for example, if it crosses over upwards and then crosses over downwards again, while still remaining below the trend line, again, that is a signal we can take into consideration. So of course, that's something we're going to look at for sure. Now, let's look at currencies because we looked at two very different indices. We looked at a growth-based index because most of the NASDAQ doesn't pay dividends and they're part of the growth category stocks. And then we've looked at the Dow Jones, which is the complete opposite, very well exposed to defensive stocks, most of them very high paying dividends and got a high dividend yield. So very different characteristics between the two. And we've looked at both and looked at signals for both. Now let's look at the euro against the US dollar. Now, very clear, let's actually look at the US dollar against the Japanese yen. The US dollar against the Japanese yen actually significantly high. I actually went to the price open. So this actually worked out to be positive for the US dollar in terms of the US dollar against the Japanese yen. The only thing is, I would be cautious about that because if we're looking at the performance of currencies, let's look at the performance of currency. Japanese yen is now at a minus. It previously was on a plus. The US dollar is on a plus as well. So now we're in line, to be honest with you. So we've double checked that it's okay. So we can take into consideration signals. The only thing I would say though is we're below the trend line, we're below the price line, we're below the neutral level on the RSI. So technical analysis is giving something very different. So we are going to look at, and another thing as well, if we look at previous upward price movements, look at this upward price movement, 1.43. If we look at the next one here, 0.71. And if we look at what we're seeing now, we're looking at 1.32. So very similar to we've had similar upward price movements, but they failed and then just collapsed again. We're on a lower low and we're on a lower high. So if we are going to speculate upward price movement, we can see we're not quite reaching this trend line. If we lower it slightly, maybe go to 65, again, not really reaching it. If we go to 60, now we're closer to it. Now, if we're looking at a 60 average price movement on an exponential approach, you can see that a lot of the time when we're getting close to it is where we're finding resistance. So the only thing I would say is if you are going to speculate upwards, so for example, if somebody does come to the 5-minute chart like this and say, if it's going to break above this level here, I will speculate upwards. That's completely down to you. The only thing I would say is be cautious that your take profit is before the trend line because the trend line has come in effect and the price has found resistance at that level on 1, 2, 3, 4 occasions. And again, we're below the trend line, below the price condition line, and we're below the neutral on the RSI as well. So upward price movement, that's something you want to take into consideration. That is absolutely fine, but be cautious because we're getting different signals from technical analysis. Now, if we're looking at the US dollar against the euro, US dollar again significantly increasing in value. We just dropped onto a lower low. That, ladies and gentlemen, is in line with what we're actually seeing on technical analysis. So if we look at a 5-minute and go to technical analysis, if we are going to get a breakout here, you can take that into consideration. Now, the only thing I would say is we're oversold here. So you have to be cautious because we're oversold. Ideally, what do a lot of traders want to see? They want to see a slightly higher retracement, so the price goes up to here, for example. That way we can get above an oversold level. So we're no longer oversold. We just have an indication that sellers are controlling the market. What can we do? Again, Fibonacci, the high and the low between the retracement. And then if it breaks below the 65, that is something we can take into consideration. We can take into consideration that trend will be below on the RSI, bearish crossover, we're below the trend line here as well. On the 2-hour time frame, we're in line with the trend, and we're in line again with technical indicators as well. So that's definitely something we can take into consideration. And again, we've got a potential entry point here for us to look at. If we are going to see upward price movement and a correction, people do want to take advantage of that. Of course, we've got our trend line as the first target. Of course, if it keeps gaining momentum thereafter, we can continue to look at that. But as a first target, we have our trend line. And the last asset I will look at here is gold. Let me just check to see if there's any questions. So I can't see any questions here. So let's start looking at gold. 2-hour time frame. The thing I really want to point out to everyone, look at this resistant level. It's come into play again and again and again. We just keep trying to break above it and failing. 1, 2, 3, 4, 5, 6, 7, 8 attempts to increase above that price movement. It's failed on every single occasion. The only thing I will say is each time we try to break above it, it tends to weaken. Why does it tend to weaken? Because as we attempt to break above it, people become more comfortable with that price. It's like, for example, if you're looking to purchase a home and somebody keeps saying to you, this home is worth 1 million, do you want to buy it? You say, no, I don't want to buy it at such a high price. If everybody keeps coming saying 1 million, 1 million, 1 million, 1 million, at some point you're going to give in and say, this is the market. This is what the pricing is at the moment. So it's either I buy or I don't. I don't have any other option. There is no alternative there. So people become more comfortable, more willing to purchase at the higher price. So if for whatever reason we do attempt to increase upwards and try and break this again, keep in mind the more time we try to break it, the weaker it can become. Now, if we zoom in, if we're looking at technical analysis, we are at the trend line and we are at the neutral level on the RSI as well. So we're slightly still bullish because we're still above the trend line. We're more or less at 50, so no signal there. But we're slightly bullish, but to be honest, 99% sure of us being neutral at the moment. So at the moment, there's no clear buy or clear sell. If we slightly increase and then we move above the neutral level, then yes, okay, that's something we can take into consideration as bullish. If we decline below these trend lines, then okay, fair enough, that's considered bearish because we're below the trend line, below the price condition line, and we'll be below the neutral on the RSI. So that's in regards to gold as well. Now, no matter whether you're looking at gold or whether you're looking at the stock market, indices or commodities or currencies, very, very important that we look at bond yields, which can give us great indications. Interest rates here, let's quickly refresh to see how this has changed. 87, let's see if anything changes. Let's wait for that to load. Also futures here as well. So looking at the performance of the market. That's something very important as well. Let's look at the VIX. We keep mentioning the VIX as well, which is very important. Where's the VIX? The VIX now is significantly lower, 0.75. So the VIX has become suddenly now much, much lower. So let's look at the NASDAQ now. What do you know? the NASDAQ now is significantly higher. So this is why it's important to look at the VIX and look at bond yields, the VIX, the currencies, and to get a good understanding of the condition of the market. So you can see NASDAQ now is higher. Let's look at the Dow Jones. Dow Jones is higher, not significantly, but still nonetheless has improved. This is why it's important to look at that. So let's end today's session. Trade safe, ladies and gentlemen. Trade responsibly. Of course, feel free to get into contact with us. Register on our website. You can register on our website for free. For people that, even after looking at today's live analysis, still are struggling to find where to trade, we of course have copy trading as well. So you can copy other strategy providers, other traders' trades, regardless of their account size or where they are, their geographical location. So somebody, for example, you may be in Africa, for example, maybe depositing $25. You may be copying somebody who's in Malaysia or I don't know, another country around the world and has an account of 500,000. So you're able to copy them. They've got a much larger account. They may have a lot more experience, and you can copy those trades. Of course, to a level which you're comfortable with. So, for example, if they're opening large trades, you can say, I only want to open a trade of 0.01. That's absolutely fine. But you're able to copy those trades. So keep that in mind. Even if you're not looking to trade yourself, you have different options available to you. So that's the end of today's session. Enjoy the rest of your day. If you need any assistance, feel free to get into contact with us. In the meantime, though, goodbye.